Do you think it will? Because Scott Bessent has been saying that tariffs aren't inflationary, but then a lot of people think tariffs are inflationary. How do you see it?
This is a very good question, because in theory, if the central bank maintained very tight monetary policy, a fiscal deficit and import duties would actually be deflationary under tight money, because these measures collect taxes that people pay. And if no money was printed, then it would have an impact to lower the demand for goods elsewhere in the system. And that would be deflationary. But as you know, the Fed hasn't really tightened monetary conditions. And here I need to stress one point that your viewers must understand. An increase in interest rates is not necessarily a tightening of monetary conditions. It's like lowering interest rates may not necessarily be an easing measure. There are other factors to consider. Say, if I increase interest rates, I start at a zero interest rates, okay? And inflation is, say, 1%. So I have negative interest of 1%. Inflation 1%, interest rate 0. Then inflation picks up and goes to 10% per annum. And I increase, as the Fed chairman, the interest to 4% per annum. So the negative interest rates is 6%, not 1% like before. So in this condition, although I increased the interest rates from 0 to 4%, I didn't tighten monetary conditions at all. I want to stress this. And in my view, today, the monetary conditions are actually easier than they've ever been. And a symptom of this monetary ease is actually that the stock market is making new highs.